Today I'm up a little bit over $34,000 on the trading day, and I'm here to show you exactly how. Let's get into it. So if we're able to start and go into the review, this is the winning trade that we ended up taking, and this was the losing trade that we ended up taking. Where'd it go? There you go. So this is a losing trade here, and this is the winning trade. So a pretty productive session overall. We ended up closing out green. Here's the realization on my Tradecopia accounts, right? These Tradecopia accounts are up around 20. These include my TradeFi, Lucid, and my personal. I have TPT and one other firm separate, just because I don't want to risk like copying it on a trade copier in case like there's even like an accidental tiny hedge. TPT terminates your accounts, and this happened to me before on 2 accounts, so I'm not gonna try it again. In terms of today specifically, we ended up having a bullish bias coming into the open. So we've been pretty bullish overall this week. We were bullish Monday, we were bullish Tuesday, we were bullish Wednesday today, and we ended up taking 2 trades, one in which was a loser, and then one which was a winner. So kind of coming into the open, looking at the hourly time frame, a big emphasis that I had in the last review was recognizing how range bound we were, but today it looks like we finally are trading out of that range. So we've been seeing NQ kind of trade at essentially consolidation for the past couple of weeks, and what we saw today is finally a move and a directional move out of that range, right? We ended up seeing price come up here. We're now seeing price trade back above this range high. We didn't see price simply come up, take this hourly high, and then come back down like we did here to here. We saw price come up here, take the high, and actually see follow through. So this week's been very profitable because we've seen a lot of validation and follow through in our continuation trades. What we had done the last 2 weeks prior, which is what's caused a bit more up and down week, is that we ended up taking a lot of continuation model trades in conditions that were very range bound. But if you look at the past couple of days, through the reversal trade and the continuation trade that we ended up taking through yesterday and the continuation trade today, we actually saw follow through. You see higher time frames starting to actually trade and seek follow through. So we end up seeing price come up here. We see the opening range move, obviously bullish through a bullish through higher time frame. We see PDL get taken out, which is obviously a bullish indication once we saw the reversal. We then also see price come up here and take out PDH or the weekly highs. And on top of that, right, we end up seeing price not reject or more so showcase reversal like we did down here, but more so look for a continuation higher. So we see a bullish indication by reversal off low, and then we see a bullish indication by continuation off high. So coming into the opening range move was the key aspect of the session. We end up seeing the opening range move, the first move being into London high, and just like we saw off the weekly highs, we saw price through New York open, trade into its opening range move, London high, and seek a closure above it, not indicating a point of reversal back down lower. It only showcased the strength past that high. So always, you can always look at highs and lows 2 different ways. You know, in terms of a low, you see a low get taken out, and you see a low look for continuation, or you see a low get taken out, look for reversal. And then you have a high where you see a high get taken out, look for reversal back down, or see a high get taken out and you see continuation. Well, again, you look at the 2 confluences through the hourly time frame. We took PDL like we talked about off a low, and we stopped for reversal, which is a bullish confluence. Then we also had the weekly high get taken out and also showcase interest in continuation, which is also a bullish confluence. And now to wrap it all up, we have our opening range move today here also be bullish by taking out a high and only showing continuation. So a pretty bullish morning here off the open. And for me specifically at this point, I wanted to ride a continuation model trade. And so the first thing I did was simply wait for a retracement in the market. And this is the first setup of the day. The reason you see me take NQ is because if you compare and contrast NQ on the hourly, you see price on NQ invert its hourly and look to trade into higher draw significantly more before ES does. So if you go to ES here off the hourly, you can see that ES still, right, not still, but off the very high of the day, we finally end up fulfilling that hourly gap fill in which NQ had already done essentially off the open, right? So essentially the first trade was taken on NQ due to that recognition of divergence and the strength in NQ just being that much better. So what I essentially eyed for after identifying obviously higher time frame, after identifying the opening range move, and after identifying overnight price, I more so looked for a continuation model trade. I wanted to see higher draw. One higher draw was this internal high, and this swing high was also another area of interest where I wanted to see price potentially come up into. What we then end up doing through our entry off this trade is we end up having a 5-minute bullish fair value gap get tapped into rebounds, indicating a bullish sequence, alongside a 1-minute inversion fair value gap also getting inverted, meaning another bullish confluence. So just as we had multiple bullish confluences via higher time frame, looking at the lows and the highs, we also have 2 bullish confluences coming into this entry model where we have a 5-minute bullish gap hold respect, and then we have a 1-minute bearish gap get invalidated and look to go invert. And quite an inversion sequence here too, because you see how engulfing this candle is. We then proceed to take our entry. The stop loss is based off the 5-minute candle wick low, which that is typically our model stop if it gives the trade enough room. I felt in terms of the trade, this trade had more than enough room, and that if we came back down and saw low taken, good invalidation zone. I guess the unfortunate thing with this trade here, the first trade of the day, is we end up seeing price come down and we end up taking stop, but then we end up seeing price almost put in a low a little bit after and coming back up and seeking follow through. Well, this is actually a good thing, and this is the importance of taking your stops for what it is. It's just not getting frustrating. This is a key aspect that I want to talk about, and it's unique for today, but it's so important, and it shows why it's so key to follow your system. Because had we simply taken this trade and we had simply, say, removed our stop loss, got emotional, and held the trade, as opposed to letting the trade stop out and then looking for a potential re-entry, we would have never been able to get into that second trade, which was on MES, where you then see NQ and ES turn around and you see ES start to become leading, right? How? Well, if you look at our second entry here in the market, once we saw price rebounds, once we saw price still create higher lows and showcase an interest for higher, we see price off this 1-minute gap, which is our entry point, and displays the gap also, where we see price come up here and we see price go invert off its 1-minute gap at 11 a.m. EST, right? Well, now if you go back to NQ and you look at the exact same gap which we had formed, which is right here, right? This gap right here, we don't actually end up inverting this gap all the way until 11:41 a.m. Eastern Standard Time. 11:41. 41 minutes after ES gave confirmation and inverting this gap into a bullish inversion fair value gap is when NQ did its job. That's how you know. And that's why it's important to take your stops, because had we held NQ and you hadn't stopped out, you wouldn't be as much as you're up today. Had you not taken that ES trade, right? So again, ES here, we end up seeing price rebalance. The entry off this trade was good confirmation, good price. We then end up taking the trade. We then end up seeing full follow through. My stop placement, or excuse me, my break even point was initially going to be high of day, but I moved it into this internal wick high because I felt price, even though it was still showcasing bullish indication and I was still highly convicted in higher draw, I just wanted to be a bit more safe here. In the case that price really started to chop up, we went break even. We fortunately saw price come up here and take out high of day before coming back down. We then see price ultimately look to trade higher, right? So in terms of the trades, I end up mentioning this, right, where I end up saying, right, we initially take our initial trade, idea, boom, boom, boom. We take a stop, and I mentioned, right, I am long. Then we essentially say break even stops, or excuse me, we end up, this is the trade right here, this is the first trade. This is the idea, boom, I'm long. And then I mentioned the fact that we took a -1R on the session, and I mentioned how it's important here to stay patient, not revenge trade, not get all these different emotions caught up, right, and just simply follow your system. We then end up seeing price again offer that entry, idea, boom, I mentioned I am long, we eventually go break even stops, and then we eventually see price ultimately come up here, and my ultimate take profit goal was this 4-hour and 1-hour fair value gap fill. So we go to the hourly time frame. You can see this is an hourly gap fill, and it's also a 4-hour gap fill, the same gap fill in which NQ had taken out earlier. But being on the 1-minute time frame, we had seen price on ES invert its gap a lot sooner than NQ. We proceeded to take ES because ES was a lot more engulfing, a lot more bullish after recognizing and after watching price. That's why you see me on live stream chat. That's why you guys see me, you know, flick over between ES and NQ consistently, is because you're able to more so get a gauge behind that. In the case there's ever a divergence flip or SMT or anything like that. So that's pretty much it. The stop placement off this trade here was a swing low. I felt this relative low here was a good stop placement. In the case we saw price come up here, invert the gap, come back down, trade below the low, I felt then we could potentially see price look to draw lower. We did not. We held fair value and we ended up coming back up here, and we see price essentially flourish. Quite a long trade, but we see price really go well. And yeah, like I said, this is the P&L sheet, 20K on there, and another $14,000 with 2 other firms combined. So about 34K on the trading day. A beautiful session, all done live, all executed live. And yeah, with that being said, hopefully you guys enjoyed the review. Catch you guys in the next one.